Okay, we're recording the October trade results webinar, and we're going to go over all the trade results for October. In October, we had 184 winning trade setups, and we calculate those based on each setup being worth $240. That's a winner. Why? Because in our example, we use 4 NASDAQ contracts, NQ, which is the best contract for day trading the stock indexes, the U.S. stock indexes. That's $20 a tick. Times 12 ticks is $240. A loss is 10 ticks or 2.5 points, and that's $20 times 10 ticks is minus $200. Then we subtract out the commissions, which on a retail volume size would be $4 round turn approximately. Some are paying a little more. Some may have harassed the broker a little and got a little cheaper rate. It's no big deal. Look for about $4 up to $5 for round turn. So we take 184 winning trade setups at $240. That's what we got. I'm going to be going over all of those with you soon. Times $240, that's a $44,160. Now, some people may go, oh my God, oh, they get, they're intimidated by these large amounts, which I've got traders that make that amount. I've seen them, and they've contacted me. They made that in one day, and they do it all the time. I've met traders that trade 1,000 round turns 30 to 40 times a day. These big, giant traders, they have special systems and everything. They go for 2 to 3 ticks, and they trade 1,000 contracts 30 to 40 times a day. So these amounts may intimidate you, but keep in mind, I could have used 8 NASDAQs as an example and reported 68,000 here. Then everybody would really freak out, right? Well, the idea is not to do anything but show you a reasonable amount of contracts, namely 4 NASDAQs that could be traded with a small account of about, say $6,000 to $10,000. Now keep in mind, day trading margin for one NASDAQ is $500 at most places, maybe say $1,000. So $4,000 to $6,000 to $8,000 account to trade for is very conservative. If you take a $10,000 account, it's quite conservative to trade 4 NASDAQs on a day trading basis. So these figures are not in any way pumped up or outlandish. And I'll show you in a minute. We'll get into it. 32 loss setups minus $200, $6,400. 216 total setups times 4 round turns. That's 864 round turns for the month of October, hypothetically, based on if someone took all of the trade setups that I'm going to show you, that would have been $3,456 commission. Now, I want to say this again, and we state it clearly and openly, and I even discussed it, that these are hypothetical returns. Not everyone is going to catch every single setup. But some of you might on some days. Some of you might work really hard and try to catch every single setup we show you today. Now, where was that? It was up here. Let me show you this. I noted here that October, the whole swing of the market opened up since the highly contracted September, where we still had an excellent month. But we also added 2 enhancements to the rules, which I'll show you in 1 second here. But we had over 9 winning trades, and on some of those sessions, they were all winners, and on most of them, I think there's 1 or 2 losers in those sessions, but that's October 8th, 9th, 10th, 15th, 22nd, 23rd, and 29th. So you see we had a very, very large group of days that were off the charts, excellent winning trades, and I'm going to show you how we do that with Boomerang Day Trader. Now, again, if you have any questions, I see some questions coming in, that's fine. Go ahead and email those to me. Most of the information that you need to know about Boomerang Day Trader as to why we trade NASDAQ, why it's much more superior to using the ES nowadays. Russell's good too, but I find that NASDAQ's best because you're moving at $5 a point. If you trade just 1 contract, if you're brand new with Boomerang, you've purchased Boomerang and you've practiced on the simulator and just trading with 1 contract, at $5 a tick, you'd have to be a real idiot, frankly, to screw your account up because you're only moving at $5 a tick. So I'm just being a little bit frank with you here. It's my tough love approach. We trade 4 contracts, but if you're moving at $5 a tick on 4 contracts, it's $20 a tick. So even if you're just practicing brand new with one NASDAQ contract and you let a wrong trade run the wrong way for 30 ticks, you're going to lose 150 bucks. So you see what I mean? You're not going to get your brains hammered out using NASDAQ, where if you use ES, you're moving at 12.50 a tick per contract. It's a substantially larger move. So anyway, the main idea is that the NASDAQ trades a lot smoother, and I'm going to show you that pretty soon here as we get into it. Now, we're approaching 1:30, so I had to take a few minutes to introduce everything here. Again, if you have any questions, type them down into an email and send them off to me. But first of all, before you do that, go over the blog, go over the FAQs, go over the video tutorials. You see, I've changed the site a little bit recently. Everything's extremely clean. Here's where you purchase Boomerang Day Trader. It's $11.95. You can purchase Hyperscalp for $1.95. It's an additional, it's an add-on indicator that helps you read the E-wave patterns and the divergence in the market. Unlike any indicator I've ever seen, you can purchase Hyperscalp on this link here for 195 bucks, and it's just an additional way to get into trading and how to use Boomerang. It's not necessary for what I'm going to show you today, but it is something you may be interested in. With that being said, let's get started down here. First of all, this is a required disclaimer by the CFTC and the NFA, which we respect highly. They regulate our industry. They do as best they can to keep frauds out of the business. Still, I'm just saying before I read this to you, there are a lot of frauds in the industry that haven't been trading more than 6 months or less, not successfully, and they decide they need a job, so they're going to put out a new system, and somehow they get it approved on some of these groups, and they come up with something. And a lot of it, I've made it a hobby to go over a lot of the systems and things out there, and most of it, you know, you just aren't going to see them reporting like we do, showing full charts and showing everything that's on the chart and where their system reacted to it. So that's why I feel we're very unique in the industry in the way we report and how I follow up with these webinars today to show you exactly. So try to understand, it's very important that this is a high-risk business. Large potential rewards are there and large potential risk. You must be aware of the risks. Don't go into trading and buying Boomerang without first practicing on the simulator, getting a feel for how these markets work and the speed that they trade at sometimes. Don't trade with money you can't afford to lose. Remember, too, that these are hypothetical results. Many of our traders, we've got over 1,000 Boomerang traders, are using the core method and trading very successfully. I get emails every day. They are taking some or most, or in some cases close to all of what the setups I'm going to show you today. Some of them may enter at different spots or different areas. It just depends on the trading skill. That's another reason why I report the setups this way. Here's the setups. Develop your skill and get into these setups. If you're just lazy and you don't read what I show you, don't follow the rules, and you just start throwing trades at it, that's an unskilled trader. We're going to try to help you become a very skilled trader through these webinars and my video tutorials and your communications to me through the emails, of course, after you've thoroughly gone through the site. See what I mean? I want you to go through the site. Everything's here. Then if you have questions after looking at everything on the website here, the blog, feel free to email me anytime with questions. There's an introduction here to my daily directional forecast, which is a newsletter I've been publishing for 14 years, almost every day that the markets have been open. Now, what's unique about the daily direction forecast is I tell traders exactly where the market's going the next day before the opening bell. We give you a one trade a day system where you can buy or sell at the market based on what I call my market forced indicators. So you can take a trial there for $1. Just go to mohansmarketforce.com. Look at below in the site. You can see an area that says free trial. And take a trial there. Check it out. You got a whole month to check it out and see what I'm saying is true. You can look at my 14 years of archives that are in there too. So I'd sure look forward to it. I publish short 5-minute tutorials about once a week, once every 2 weeks. Now what you do, here's a live simulated demonstration on this one to watch the tutorials, which show everything I'm going to show today, but they're in 5-minute condensed form, which gives you an opportunity to just take a quick glance and go over the particular day's tutorial. You see, here they are here. First on there it shows the bias accelerator, a little explanation about that, and then you can see down here all I'm doing is clicking on this library of tutorials. You see that? And it goes all the way here, and then they go all the way back. You can progress the different charts this way. And it tells you a little about what they are here. So, very important. And this will help you understand Boomerang Day Trader more and how to use it. Now, I'm assuming most of you have already purchased Boomerang Day Trader that are on this webinar today. That may or may not be true in all cases, but either way, I want to mention before we get started, which is going to be right now, that this is a roll up your sleeves, almost a little bit boring after a while, because I'm going to spend the next 2 hours going through every single trade setup that occurred. It's a lot of work for me. I'm wired up to do it today. All I ask is that if you're serious about trading Boomerang, whether you bought it or you're on the verge of buying it, pay strict attention and take notes. Okay, you with me? Okay, let's rock and roll here. First of all, I have updated the Boomerang method rule sheet. If you don't have this, email me at mohan@daytradersaction.com and just put request new trade sheet, trade method and rule sheet. This is it here, and all I've done, there's only one thing I've done, and that is add rule number 5 here, which is an enhanced method for trading, and I'm going to get into that very strongly soon, and I'll keep bringing this back up and referring to it. Nothing else has changed at all if you have the original one, except this. I've added chart samples for each exact method within our one trading method. It's really one trading method, but there's some slight little variations of the one trading method. Now, also a feature when you get this core trading method sheet, see this on the top here, you can click on the plus or the minus and you can blow the charts up to a nice size. You can absolutely see everything very clear. It's a new feature I've added. You see that? Look how clear you can see these charts. So again, this is something we do that I notice a lot of other these trading advisor guys, they show you these scrunched up charts. You can't tell where. They say, we got long here. See that? Yeah, sure. But you see a lot of wiggle room and it's all scrunched up. You don't know if they got stopped out or not. We don't play games like that. We go through each and every trade, which I'm going to do in just a second. I had to take this first 15 minutes to introduce all these things to you. Some of them are new. I know you guys that have been with me a while. It's a repetition. That's okay. See that, though? That feature there, plus and minus, you can shrink the chart up. For example, if you're going to print out just the top portion for your trading desk, you don't need the copy this large, right? So you want to print it out, just take the minus and shrink it down. You can make it very small if you want. You can make it a little, practically like a little card reference on your desk, or something. Look at that. You could carry it in your pocket. Anyway, here's the point. You can print it out like this. You're all set to go. So I'm going to keep this up in big letters so we can go to the chart samples. Pull it off now, and let's get started. Okay, here we are. Now, this is a West Coast chart because I'm often on the West Coast, and this is the chart I use. 6:30, for example, is 9:30 Eastern Standard Time. Just add 3 hours, or if you're in Chicago, add 2 hours. 6:31 is 8:31. That's the opening time in Chicago. Now, that's where the contract we're trading originates. It's the CME, but either way, just remember it's a West Coast chart. Generally, for Boomerang, the setups I'm going to show you today are all the setups for the entire session, except if we get 15, 20 minutes before the market's closing, we'll probably ignore those setups in most cases, or I'll review them real quickly. Now, as I mentioned, we're going to go over the setups a little bit slow during the first hour. I'm watching the clock carefully. and then I'm going to record that, and then the last hour I'm going to speed up so we can hopefully get through the whole month. Okay. So here we go. Come in the close today. The market's up today again. And, you know, I was reporting recently, you got to remember that there's a lot of big corporate insider selling going on right now, historical levels. So you might consider a little protection for your portfolios. I just happened to glance at the Dow and seeing the close, so I just make that little warning to you. You heard it here, and you go back to this webinar in a few months and you go, oh my God, why didn't I protect my portfolio a little? Okay, here we go. Here's the opening. Generally, you're not going to take trades on the opening, but for the purpose of our education, you're going to see this a lot. And this is, by the way, why October was such a huge month, and there were so many more trades. It's because I had mentioned this in September, and I have it on a video tutorial where I mentioned it. Some of you may have caught it, some of you missed it. On rule number 5, one of the rules, if the dynamic trend bands number 1 and 2 match in color, then a trade channel in that same bias direction, the matching DTBs, can be taken. Now, you know the core method, which many of you are familiar with, is when the white line, which is the fast line of the rim of the trade channel, cross over the dynamic trend band number 2, and we get a matching dynamic trend band number 1, same matching color, we trade, and the spread on dynamic trend band 1 and 2, the spread is 250 or less, and I'll be going over and over many, many examples of this today. We can take, when those conditions exist, we can trade a pullback to the signal line. All trades are made on a pullback to the signal line within the appropriate trade channel. There's never any just winging it or just it looked good here or the DTBs crossed over, I'm going to get long or short. Those are all what I call guesses. You will find that if you guess on a trade, and you'll know it because you're not following these exact rules, most of the guesses will not work out. And actually, the horrifying thing is if they do work out, because now the market's confirming your guesses, that affects your ego, thinking that you know more than the rules or more than Mohan knows about trading his own system. And what will happen is you won't be able to achieve these kind of results I'm showing here, which is the goal. It's so easy to just follow the system. This is a very simple system to follow, probably the easiest out there. So again, we have rules about steep channel and all that. I'll get into all that. It's very simple. Choppiness, very simple to understand. When the markets are flying around all over, it's not that easy to trade. We all know that. I'm not saying trading's simple. I'm saying the DTB system and the Boomerang Day Trader system is simple. So number 5, what we added, and this was in the September webinar, if the colors match, you can take a trade channel on that side. Subsequently, this is like the same rule, but a little bit. If there is a wide channel, a spread of 5 NASDAQ points or more between DTB 1 and number 2, then the next counter trade channel can be taken as always within the trade channel, the counter trade channel, and on a pullback signal line. Now, it's very easy to understand, but one point that I think some traders have asked me about, they're concerned about this 5 NASDAQ point spread. I'll show you that right now because the first trade coming into October, look here. What you're looking for on the 5-point spread is between this. This is dynamic trend band number 2. That's this thicker magenta, solid magenta, or cyan colored line. Let's call it red and blue. It's really like it's magenta. It's a darker color. I made it that way because it really stands out in this background. The dashed dotted thinner line is dynamic trend band number 1, and the color is the same, magenta and cyan. Are you with me so far? For those of you who own Boomerang, this is all a review. Where we measure the wide, what we call the wide spread or wide channel. Now this is different from the fat channel. The fat channels that we refer to are right here. That's this white line and this red line. Those are the trade channels. When those get fat, like in this case, which I'll go over in a quick second here, I'm just trying to get all this preliminary stuff down and get it recorded. When you see the market shoot up like this, see these whenever you see a 3-point, 1850, 21, these are 3-point long spike candles. The minute you see one of them, you should be on high alert. If you see 2 and 3, you're going to have guaranteed a fat, what I call a fat channel. It's a fat trade channel. It's a trade channel. Look at the beer belly on that channel there. Don't worry, I get one once in a while too, but I try to exercise it off. Anyway, the point is, when this shoots up like that, it creates a fat channel. You do not want to take a buy on a pullback signal line on the top of a fat channel or on the bottom of a fat channel, because the trade is going to go choppy and in most cases will not work out. You get stopped out. That's why that rule is there. So a wide channel, and it's very important to distinguish, especially if you email me with questions. This is not a fat channel, it's a wide channel because it's a dynamic trend bands. Fat channel refers to the trade channels, or I call it a wide channel here. This is a fat channel. I know, look, we got to have some terminology in order for everybody to get it crystal clear and to facilitate the email communications and the way I speak on the webinars here. So notice here, when the market's running to the lowest point and the channel's the widest, which is right about here, 23 even. See over on the right side, 32.23, and down here you got 32.15, half. That's approximately a 7 to 8 point spread. And that spread is measured not up here, it's measured in the case of a wide channel rule when the market's making a run. What you're looking for is if that spread at the widest point was over 5 points or more. If it is, that tells you be ready to take the next pullback to the signal line in a new trade channel. Now, a trade channel is always going to be alarmed and marked with one of these green or off-color red arrows. That one's got a bias accelerator on it. Here's one here. New trade channel opens. This kind of arrow is going to print, and there'll be an alarm if you have the alarm set. This one, off red, off green. This is a little off green color. Same thing. We do not take any trades on Boomerang unless a new trade channel opens up and there's a pullback to the signal line. The first 6 candles, 5 or 6 candles, I think the first 5 candles, if there's a pullback to the signal line, it will be marked. In a buy channel, the pullback signal line will instantly make a sound alarm and mark it right on the signal line. That's this real thin dash line. It's something I developed long ago, but it's so precision that I've used it in Boomerang to color the candles for the bias. It changes it's very sensitive. So when you have a new trade channel and then a pullback signal line, and now just for your information, this simultaneously pulled back the signal line and opened a new trade channel, so it printed there. But you notice after 5 candles, there's not going to be a print on the signal line. That doesn't mean that you won't still take a trade on the signal to the pullback to signal line if that's appropriate. Okay, so having explained that, I hope you understand the wide spread is based on the run down. In this case, here's the wide spread. The wide spread, it doesn't mean you have to wait for a new trade channel open, then measure the wide spread. It's based just on the idea that these 2 bands spread out really wide on the last run that was made. And that tells you, that permissions you to take the next opposite trade channel, in this case would be the buy one, before the white line crosses over the dynamic trend band number 2. This is an incredibly valuable information, and I could have kept it to myself, but I tend to want to share things with traders that will help them make more money. Because if you get rich, I know for a fact that you're going to send me tickets to Maui. And my vacation's coming up in December, so there's your chance. Just kidding. I don't fly much anymore. I've been around the world 19 times, and I've kind of been there, done that. I love flying. I love tropical islands. I look at them on the internet, on the YouTube, and just use my mind to project myself there because I got these rainbow-colored charts to look at, and they remind me of a sunset on the beach there. So, okay, so do you understand that? Widespread allows you, permissions you. I like to say permissions because we're following a very strict, disciplined system. If you're in the military and your sergeant orders you to go run the obstacle course, and you said, well, he said I should run the obstacle course, but frankly, I'm going to go over and have a drink of water, he's going to kick your butt. This is the military, and it's serious. You cannot do that. So you have to follow orders. So similarly, when you're trading Boomerang, I am so anxious for you to be a winning trader, make money so that your wife doesn't kick your butt out of the marriage or whatever. I want to make sure that you make money so that you can pay all the bills, so you have the capital available to have some fun, to feel good about your life. Okay. I hope you all understand that. If you don't, and I don't know why you wouldn't, email me and I'll try to help you out a little. But there are, again, exact, crystal clear. You don't need to email me necessarily if you read all the material I've put out. I've put a lot of work into this stuff. Here are the brand new charts here. Let's see, this is a choppy market. Let's see what we got here. This got to get all this stuff, preliminary stuff open for you here. Here's an example of the widespread chart sample showing that. Here's a sample of the matching bias indicators matching. Now, bias indicator 1 doesn't need to be on top of number 2 if you're going long, as you can see in the sample here. Once both of these matched, and you had a buy channel opening up, you can take that, pull back to the signal line, and up they go. Here's matching bias. This is like a good chart because it's a double example, which we'll see a lot of those in October. Here's matching bias indexes, right, or bias matching dynamic trend bands. This already set up a sell signal here because of the crossover, the white line over dynamic trend band number 2 and the tight spread here. But when these match, that's a sign for a, so that's what rule number 5 is, and that's what the enhancement was. I added it on this new sheet. You can order this sheet for free from me by merely emailing me and requesting it. So I'll be bringing this up more. Now, I've got to get going. I've been talking too much, I know that, but I need you guys to really understand this stuff because it'll help you make a lot of money. And that's what this webinar is about. So this was right after the market opened. This pullback signal line, you got a wide spread here of more than 5 points telling you wake up because we're going to get a buy signal. We're going to take it. New trade channel opens here. Pullback signal line, a whopper move to the upside here. We're going to scalp 3 points out of that move. That's our first winning trade. Now, I'm not going to keep track in my head of all the winning trades for each session and go over it. I'm going to go through them at very quick speed now. We're going to start speeding up so we can get all this set up. Now, look here. 23.75, 28. So that's a 4-point spread on the dynamic trend bands here, right? That's at the peak. I want you to look up at the peak of the fatness, of the thickness, not fatness, sorry, the wideness of this spread. You see the widest point is right here. That's your point where you're looking for it. 23 to 28. I mean, arguably right here, 23 to 20, that's a 5-point spread. So it actually permissions you to go ahead when you get this next sell channel alarmed and opening up here. It's telling you the new sell channel's opening. Your first pullback was right here at 25.75. Your second one was here at 25 on the dotted ones, because again, the first 1, 2, 3, 4, 5, 6 candles. The first 6 candles, it's going to mark the pullback signal line, but that doesn't mean that's your only. You can't trade a pullback signal line if you get it set up otherwise. So this second winning trade was permissioned with the 5-point spread at the peak here to trade right at this pullback signal line or here. If you missed it, so what? Don't worry about it. The white line crosses the dynamic trend band number 2. The spread on the dynamic trend bands right here, well, first of all, they're matching color here. So there's your another permission to go ahead and short the market. And the spread, 23.75, 25.75, is 2 points. So that's under 2.5 points. You understand that? So right here at the trade signal line at 21.50, you could have gone short. 22.75, was a high. So no way was even close to getting stopped out, and down they came for the second winning trade there. Okay, now I'm going to start going through them faster. So we have a matching, we have a 22.75, 19, 21, 22, not a 5-point spread. So you would have looked at this and said, am I going to take this buy signal here? Well, again, these are simple things, but you got to get them down and do the work to memorize them in your trading. 18.25, 20, so that's fine. This candle here, 20.75, 23.25, almost a 3-point candle, so a little bit of caution here. But this spread, notice this. Would you have bought right here? It's formed a fat channel, obviously. Would you have bought this pullback to the signal line? It's a little quiz for you here. The spread here at the time of that pullback is 22.75 and 19.50. That's a 3.25 spread. Thank you. No is correct. You would not have bought this. You see how the system saved your butt on this one? The spread was too wide. The rule is it must be 2.5 points or less. Therefore, you would not have bought this trade. You would have been waiting, and the spread thin, but as these candles turn red, you would have said, uh-oh, I'm going to wait. Then they jump back lower. Now the question is, would this have been a sell signal? I'm just going into this for detail in the first hour here. Then things will speed up, you'll see. 22.25, 18.25, 4-point candle spike lower. The minute you see a 3-point or greater NASDAQ candle on the 450 ticks, that's a warning. Choppy market or potential fat channel. That's how fat channels are created, by these elongated spike candles. That's why we use 450 ticks. I get emails sometimes and they say, oh, can I use 1 minute? Can I use this and that? You can use whatever you want. It's a free country so far still, but the problem is I invented this system and correlated all these indicators so you can make a lot of money, and you want to start changing everything. Well, you got to look at that from the point of, I've been trading for 25 years. Why do you want to change what I've spent years developing that's really profitable? Do you want to make money, or do you just want to go in and change everything? You see what I'm saying? Follow the system. You'll be quite happy. Here's why. Now, this is really important. In fact, I'm glad this happened right when we get started so I can start zooming ahead, because we had this choppy opening period. We had 2 winning trades. We had a fat channel that was not permissioned because of the spread. We had a spike candle lower, which did not permission a sell trade. Then look what happened. This is so important. The dynamic trend bands, we have a new buy channel opening with, yes, spike candles. That's right, but look at this. A crossover, which is usually a sign of a surge, of dynamic trend band over number 2, number 1 over number 2, which is in the video tutorials. There are 3 methods listed in the video tutorials that come with the dynamic trend bands when you purchase Boomerang Day Trader. They are chart reading methods. They're not trade entry methods. Those are only what we show here today. But they are chart reading methods. When you see this crossover, that tells you watch for and expect about 65 to 70% of the time a surge in the crossover direction. Just something to be alerted to. So indeed, with these spike candles, we have a fat channel, but with this crossover, that tells us we have a fat channel, but watch to buy with the matching colors and a crossover on a pullback to dynamic trend band number 1 or the red line, which you can see here. The first pullback to the dynamic trend band was here at 28.25, and they just barely missed tapping the red line at 28.75. So right in here on one of these taps to the dynamic trend band 1, you could have gotten long for that trade. So we had 3 winning trades in a row now. These 2 according to the exact rules of the system. And that's why I am reporting our track record this way. For those who, I rarely get them now because hopefully these clueless guys go away with live trading. This is not live trading. Yes, but this is so important to understand. I could argue this in a court of law. The rules of the of the Boomerang Day Trader system are so exact and specific that even though we are looking at these trades after they've occurred, even in live real-time trading, the rules don't change and the methods don't change and the way you take the trades don't change. So they can be shown in this way, and we still call it hypothetical, but it's very valid. Okay, third winning trade here. Yes, we're going to take 3 points in this move, and I know they went substantially higher. In fact, if you bought this 28.5 here, they ran up to 37.5, almost 10 handles higher. Well, you know, we're trading a mechanical system, and a lot of times grabbing those 3 points is going to save you. Sometimes they're going to run. What to do about that? Well, if you think there's going to be a runner, maybe you have some other ways of looking at the market, and you think, no, this can be a stronger move here, then just use the dynamic trend band as a trailing stop. You see that? When it crosses over here, how the move tends to stop, and it jumps again. But once the prices cross over dynamic trend band number 2, that's the end of the move. So you can trail them that way, but I request that first of all become extremely expert at the trading setups I'm showing you today, and then look to try to catch some of those runners. Don't do it if you're brand new to using Boomerang. Just wait, be patient. It's a long-time career. My assumption is you'll be doing this for the next 10 years, right? So that's plenty of time to get highly skilled. Okay, like I said, this webinar is we're gonna roll up our sleeves and get going. I'm gonna speed things up a little now. Is this a short trade? Well, technically it is. Whenever you see what's called a steep line, see that steep dynamic trend band number 2? Whenever that steep line is there, you want to wait for dynamic trend band number 1 to cross that to really confirm the next trade. You can watch the whole, obviously want to see the new reversal channel on the other side, but if you wait for the dynamic trend band number 1 to cross over, that's generally confirmed the trade. Now what happened? This is common when you get a steep run-up, is there's these continuation moves. It was stopped out. So this trade would have gotten short right here at 38 even, 38 quarter, went down to 36 half and got stopped out. Now notice this too. You're short at 38, right? And you get a jumping candle here, which didn't knock out the stop, but the candle turned green, and this next lower pullback was green, right? Well, the trade isn't working out too good. You can always jump out early. You can wait for the 2.5 point stop if you want to be totally mechanical, no big deal, but 2, 3 green candles in a row, you might as well get out of the trade, lose a point instead of 2.5. Now, here's what's important. Dynamic trend band number 1 and number 2 are both the same color, both that blue color. So by the pullback to the signal line, 40.25, up they go to 43. You had to wait a little scary pullback. There they hit 44. There's your 3 points. What about this trade here? Well, the dynamic trend band number 1 is blue, and so is dynamic trend band number 2. So this is not a sell trade. And you can see whenever you see arrows flipping like this, candle colors changing, red one candle, next is green, arrows, new buy channel, new sell channel, spike red candle, downside trend move, just skip all that. That's just whipsaw at the top of an extended move. That's all it is. And you can see that here. Look at this candle, 41.25, 44, whopper spike moves forming a fat. This is not a buy trade. This is your warning right here to stand aside. We're mid-session. There's plenty of time left. So then what happens? You get this, and then you get the reversal. There's no wide spread in the dynamic trend bands, but on these, with this whipsaw, probably the best thing to do, this is what I do, watch for the crossover, watch for the dynamic trend bands to match. You're in a sell channel, trade on a pullback to the signal line, which is 43, and down they go. in the midst of that, you had this counter crossover channel. Just hold short. These are matching. It's too tight, and it's just some of this whipsaw reaction, the huge up move, and of course they countered that with a huge down move. Again, same thing. The dynamic trend band is very steep. The white did not cross over the steep dynamic trend band, which still would not have been a trade signal. This is radical choppiness. You're not going to want to take this trade until you at least see what? That's right. The crossover of dynamic trend band number 1 right here. I'm shaking my cursor here so you can see it. Over dynamic trend band number 2. You see dynamic trend band number 2 is flattening. Dynamic trend band crosses over. That's after a steep move and all this whipsaw. See, it was just a repeat of that last up move. End of the move, a bunch of whipsaw. Wait for the dynamic trend band number 1 to cross number 2. Then take the pullback to the signal line at 35.75, and up they go to 39.75, and you grab your 3 points. And again, that's why we take 3 points, because look at, if you were trying to hold for a runner or something, you'd have got shaken out or got nervous here. I would have. And yeah, it turned into a runner, but that's okay because, now let's go over this carefully. One of the rules, important rule, I know my broker loves this one a lot too. It's called the second level move. Where is that here? If dynamic trend band is the same color and on the same side of DTB number 2 as the trade channel and the slope is relatively steep, then a second level trade can be made after or on a new continuation after, and I put it in caps, a counter trade channel has occurred and failed, returning to a new channel within the DTB bias. And we do not take third level trades. Now, that's easy to understand when you look at the chart examples I've put on the core method sheet, but it's real simple here. See this arrow? That was a counter trend channel. Now, the white line didn't even come close to dynamic trend band number 2, but it quickly created another up channel, a buy channel. As long as you have a counter channel that fails, both of these dynamic trend bands are matching, a new channel occurs, there was a jump to the upside, a pullback signal line, take the trade, and up they go. That's called a second level move. Had this kept going higher, we don't take third level moves, only the second level, then you just wait. Now, again, this trade, I was just showing you for the chart position, but you can see it's 10 minutes before the New York Stock Exchange closes. It's a little late in the game to take this trade, but I wanted you to see that. Okay, now we're going to start flying here. We got to. Okay, 6:32. This is the opening here. Market opened right here at 6:30. You have a new buy channel. Dynamic trend band turns blue. Generally, right at the open is not a good time to trade the market. Maybe 5 minutes into it, even 3-4 minutes, but not just right at the open because you have this spike candle here. Had you taken this pullback to the signal line because you saw the matching dynamic trend bands and all that, 28 even, it would have held the stop on this pullback, and up they go for winning trade. Now here's another example of a level 2. Let's see if it panned out. You have the counter trade, the counter sell channel, which did not cross over the dynamic trend band number 2. This is not a sell signal. This is waiting to see if you're going to get a second level trade, and we get it right there. A new buy channel opens, a pullback to the signal line at 32.75, and the move went up to 36.75. So there was 4 points in this highly active, spiky, scalpy move. This is why we always and only trade the pullback to the signal line. If you saw this channel open and say, oh, it's a second level trade, and you bought them up here, you would have gotten stopped out. It has to be at the pullback to the signal line. Now, just so you know, in the Boomerang Day Trader system, here's a chart trader here. We don't use a dome or anything like that. You can use it if you like domes, but we just put the simple chart trading method here. And when it hits the pullback, the signal line, you hit buy or sell to market. In this case, buy. Now, you can wait for the dot and the sound alarm, which is instant, but I recommend that you keep your eye on the right side of the chart, and you'll see these price markers and the price marker and the dynamic trend. I mean, the signal line is marked here, and when those two, this one, merge together, you hit buy at the market. And by the time you're hitting buy at the market, the sound alarm is going to go off, the Roadrunner sound alarm, and the print on the chart will occur. All you're doing by going onto the right side is you see these tap and merge together and you hit buy or sell, you're going to probably get the best fill available. Don't worry if it's a tick or two off. If it's a fast market, it's a tick or two, don't worry about it. Boomerang is designed so that you will get, even with a fill that's a little bit off from the at the market, you'll still get your 12 ticks out of the deal. Okay, I'm going to speed up. I keep promising to do that. New trade channel, white line crosses the dynamic trend band number 2, pullback signal line marked right here and alarmed, down they go. 5-point spread down here at the peak. You look for the peak area, which is right around here, 29.75, 23.70, more than 5 points. That permissions you to take the next buy channel, pullback signal line right here, up they go, winning trade. Cross over here with a blue dynamic trend band number 1 does not permit, it's got to be red to permission a sell. Even when, that's the rule. When they cross over the dynamic trend 2, number 1 has to permission that, and it has to be the same color. It's always blue here. So this ended up being, once the prices go over dynamic trend band number 2, it's the beginning of an up move. This was actually a counter move, and this was a second level move, but it doesn't matter to you because you're just trading the rules, right? The new channel opens up, leaps higher, forms a fat channel, but now you have the dynamic trend bands matching. So immediately what should ring in your mind is, we got a fat channel, buy a pullback to the dynamic trend band number 1 or red, or in that zone. So in this case, here's your first pullback to the dynamic trend band number 1, because this fat channel was created, but the colors match, and up they go. Or you could have bought right here in the middle of this zone between the red line and the dynamic trend band number 2 or number 1, or if it hit the red line, that was your best price. Either way, even if you bought it here, you got your 3 points and not stopped out. So that's level 2. We're not going to take level 3, and there's a mini level 4 here. We got, at this point, a steep dynamic trend band. Are we going to take this? Well, same thing. 38.50, 36. These are not spike candles. They ended up forming a little bit of a fat channel. However, the rule, as I mentioned, is when you get a steep dynamic trend band, you do not want to take a counter move unless and until dynamic trend band number 1 is crossed dynamic trend band number 2. Otherwise, don't take that channel. It's too risky. Wait for the pull. Well, guess what happened? By the time dynamic trend band right here crossed number 1, crossed number 2, the preceding candle had formed a new buy channel, and the colors both matched. So on a pullback to the, you would have avoided this. Do you see that? Because of that exact specific rule of not taking it until dynamic number 1 crosses. And when it did, everything turned green. You bought a pullback signal line, and you got another winning trade. Do you see that? This was not a 4th level move or 5th level move because the dynamic trend band had crossed. The white line had crossed, causing a new configuration. But we avoided losing on the trade because of this exact rule. Do you see how amazing this system is? How precision is? I spent a long time developing this for you guys. This is really good stuff. This rule, you would have missed this losing trade, you would have gained on this winning trade. Okay, we got challenged again here. It's a choppy day, obviously. What happened here? Spike candle. Here's this. Now, the spike candle doesn't just mean within the trade channel. Anytime. Look at this one. 44, 41. That's 3 points there. Look out. You have to, first thing you have to say is watch out when these spike candles come in. It's whipsaw. Here's another one. Here's another. Fat channel is formed. The dynamic trend band number 2 is still blue and trending upward. The white line here for the fat channel, no permission to trade this action here. And the same thing happened. Both the dynamic trend bands matched right here. Do you see that? Even though this had crossed over, the color is the same. You buy a pullback to the signal line right here at 42, and up they go to 46.5. Another winning trade, and we avoided this, what would have been a losing trade, by following the exact rules. Email me if you have any questions, or just go over this video. I'll have this video online pretty soon. You can just go over it again. Here's a choppy mess. Again, spike candles. Notice this. Colors changing. Red, green, new buy channel, new sell channel, spike candles, red, green, counter spike channel. Just avoid this crap. You don't have to trade every single move of the market. Just wait for the exact Boomerang Day Trader system signals. So then what happens? Matching dynamic trend band. You see why this rule is really great? This rule number 5 that I put in there? This was put in last month. Some of you may have missed it, so I created a new trade sheet. If 1 and 2 match in color, then a trade channel in the same direction of the matching DTBs can be taken, is permissioned within the trade channel and the pullback, the sig line. In other words, we had this spiky mess here, but this market wanted to go up. Well, look how Boomerang tells you that. First of all, this trend line here, the dynamic trend band number 1 is still bullish, or number 2 is bullish. Sure enough, this one matches. Sure, they're spiking higher, but look at dynamic trend band number 1 now turns blue, pull back the signal line, and you catch this radical spike move up again. And this was permissioned. Why? Because this crossover here created a whole new configuration of the downside. It was a choppy mess. It wasn't taken. But when these matched, we traded the pullback signal line, and up they go again. Again, if you have any questions on what I'm saying here, type it into an email. Shoot it off to me after you've gone over the blog and listened to this webinar. I'm sure it'll be answered on this webinar at some point. You just have to listen, and you have to take notes. We're using still charts, live charts. I can't sit here for 6 hours and show you all this stuff. It's trust me, we got a plan to help you with that, but it's in the future. Anyway, here we go. What happened here? It's an hour and a half, about 2 hours before the close. Plenty of time. White line crosses dynamic trend band number 2. Right here is where the dynamic trend band number 1 changes color. The market ran lower, no trade. Now, this was a fat channel. What you could have perceived is the matching colors and the crossover here. There was a little bloop on the dynamic trend band number 2, no big deal. Then they matched, and there was a crossover. So this fat channel, as you heard from earlier, you can take the next pullback to the signal line, or in the case of the fat channel formation here, with this crossover, you can trade to where? That's right, pull back to the red line or the dynamic trend band number 1. In this case, the red line was the earlier trade position. You got short here, 46, and down they came. That's an important rule. If a fat channel is created, it's real simple. If a fat channel is created and the dynamic trend bands match in color, which they do right here, and indeed with this crossover, which isn't even a requirement, but that adds more confirmation of a downside move coming, even though the market's spiking against it, you take a trade, a pullback, and you notice how they stopped right at the dynamic trend band? That's right. That's why I invented that. Can you possibly imagine how many weeks and lost weekends in front of the charts and months getting these exact configurations? I'm sure you can. So pull back to the red, or in this zone between the red and the dynamic trend band as your short, and down they came for winning trade. A spiky, crazy day today on this day. This was, by the way, oh boy, October 2nd. I'm really behind on my going through all these setups, right? Okay, so that was the end of that market. Okay, let's speed up and just follow as best you can. I got to get through this for our first. We're already at the in 15 minutes we'll be at hour 1 for the first recording. But I explained a lot here, and it's good because you're going to have that on a recording that you can go over everything I've said in the last hour and just go over it again with your notes. It's really simple. I know if you're brand new to trading Boomerang, it seems complex. It's not at all. This is actually the simplest system of trade I've ever seen. That's why I made it that way. I made it simple. Okay, big run-up in the markets in pre-market opening. Here's the opening right here. Nothing to do here. We're watching for counter reversal. Why? Why are we watching for counter reversal? That's right, because here the spread, if you notice on the ultimate run-up, the widest point, you have 40 1/4, 46.50. That's more than 5 points. So that permissions you, without waiting for the white line to cross over dynamic trend band number 2, to trade the pullback in the next channel. Here's the arrow right on this candle, opening the new trade channel. And here's the marked pullback to the signal line right here at 41.75. So say you got short at 41 1/4 or 41.50, whatever, and they came down to 35.50. So nice 3 points there. Now, someone may say, well, isn't this a second level move because the dynamic trend band crossed here and they're both matching the same color and a pullback to the red line or the dynamic trend band number 2? Well, look, off the record, it was a good short. Yes, those are probably going to work out really well. It wasn't an official rule. Neither was this. Why? Why was this not a second and third level move? That's right. Because there was not a counter arrow buy channel that failed to permission the second level trade. So on these, you just got to eat it. You know, we grabbed our 3 points here. Some of you who are really experienced in trading Boomerang Day Trader and watching this for months and months, I've been offering Boomerang Day Trader for 4 years now, so there's plenty of those. Yeah, you might have grabbed this. That's okay. If you didn't, if you just sat and watched the market fall apart, that's okay. Don't worry. You've seen the results I've shown you for October. That's all you want to focus on. Just picking out the exact correct trades. And what's wrong with this trade channel here? The white line crossed over, right? The white line crossed over here over the dynamic trend band. What's the problem here? That's right. This dynamic trend band number 2 is way, way, way too steep. If you just put the cursor up there, you can see the width of it. Here, a flat dynamic trend looks like this. See down here? When I put the cursor on it, they're practically on the same level. Do you see that? This is not anywhere near that. It's a big, what I joke, I call it a slice of pizza because it looks like a slice of pizza here. If that's a big piece of pizza, you don't want, that's a steep dynamic trend band. But, so we didn't take the buy here because of the steep dynamic trend band. And if you did, well, shame on you, you would have gotten stopped out. But don't worry, because immediately after that, there was a counter reversal sell here with the dynamic trend band colors matching. You see that right here? And a pullback to the signal line right here at 26.75 and a huge collapse down 13 NASDAQ points from there. No chance to get in. If you missed this one, you were too slow. It's not Boomerang's fault. Boomerang told you to get short here. I know, it's a fast game, isn't it? Fast business. So you missed it. So what? Doesn't matter. Now the line's really steep. Look at that. Huge, steep downward move. Notice how the move finally ends after prices cross the dynamic trend band number 2. And there was another reaction again, super bearish day early in the session. This was the 3rd of October. Same reason why this is not a buy, even though there's a match here. Even though the spread, let's see, 1250, 14, even though the spread's thin, there's a match. This dynamic trend band is way too steep. And what did I tell you earlier? What was the rule I told you? Do you remember? That's right. If you're going to reverse a steep dynamic trend band configuration, you must wait for dynamic trend band number 1 to cross dynamic trend band number 2. That's all. That's a very simple rule. That's all you have to remember. You're jumping on this thing and, oh, it's going to revert. No, 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 no. The rule says wait until the dynamic trend band number 1 crosses number 2, then start looking for that buy configuration, which you have right here. New trade channel opens up here, and it's always in a new trade channel at the pullback to the signal line. There is never any other entry for Boomerang Day Trader other than your own guesses on trades. Pull back to the signal line, and up they go. If you trust me and you just get all these trades exactly according to the rules, just like a military discipline, you're going to be quite happy because you're going to see your meter. See this meter right here? It shows the plus. You're going to see this thing, $240 per winning trade. You get 3-4 of those. You're going to have $1,000 up here. You're going to be quite happy. If you're guessing on trades and losing, and then blaming Boomerang or something, and I get that sometimes from the amateurs. Give me a break. I'm not even going to answer your email. You have to follow the rules. If you can't develop the discipline to follow the rules in these markets, again, tough love, but you're in the wrong business. These markets aren't going to change. Sometimes they get like on, what was it, Monday or something, the banks are closed, the bonds are closed. It was just a flat line 5-point range practically, or 3 to 4 point range on that. You got to know what's going on in the markets. You got to know that it's Veterans Day, the banks are closed, the bonds are closed. Don't trade on those days, or if you do, be very careful, Don't be too desperate to trade. And if you get a day off because there's a Fed announcement or something, you don't want to trade, cherish that day. Get away from all this stuff and go down to the lake or the ocean, or go out in your garden, or go golfing, or go do something. Go have a few drinks and watch the game. Do anything but sit and stare at charts. Just get away. This is a career and a lifestyle. I'm trying to train you how to have a really nice career and lifestyle in trading using Boomerang. Okay, so this 8:30, 11:30 Eastern Standard Time is usually a choppy period because that's when Europe leaves the U.S. market. Their market closes, and a lot of those traders exit the U.S. markets. You get a choppy period for half an hour or so. Just always keep an eye on that time. It's always going to be a little tricky, but what did we have here? We had at the peak of the dynamic trend band spread, we had 1275 to 1875. That's more than 5 points. So that permissions you to go short right here, 1775. And they came down to 1450. So there was 3 points in here. If you got a trade down at 1650, you were only going to get 2 points. If you caught them on the signal line, now notice how the candle jumped all the way to the red line. So that trade, signal line trade, you should have got that at 18, and it came down to 14.5. So there was 3 points in there. If you got a worse fill, well, that's just part of trading. You might have gotten stopped out in this move up here. There's a counter buy channel here. This is not a second level move because you already had one second level move up here, which didn't pan out into a trade. There's no pullback signal line. Then you get, this choppiness. Then we get the white line crossing over dynamic trend band number 1. The pullback to the signal line occurs right here with the dynamic trend bands matching at 13, and they run up to 17. So this one would have got stopped out just on a spike reaction. Had you noted the fat channel here, 1650, 13, notice that that's more than 3 points. If you had caught that and say you didn't get shorted at 16, or I'm sorry, you'd caught the spike move here, and you said fat channel warning, I'm going to wait. Then you saw the dynamic trend bands match here. You would have traded a pullback to the red, to where? The red line and the dynamic trend band number 1, correct? That's the rule I just mentioned to you a little bit before. There they are. The red line and the dynamic trend band number 1 are at the exact same level, which is 1575, and down they go. You wouldn't have been stopped out had you memorized this rule and saw this spike candle and said, it looks like it's going to form a fat channel. I'll just trade it, the pullback to the dynamic trend band number 1 or the red line, and that's what happened. And if you got stopped out, big deal. Don't worry, there's another trade on the way. And again, here is where the second level here, unfortunately, did not get permission because this spike move this way did not create a counter buy channel that failed. Now, you may have said to yourself, well, that was enough of a counter reversal. I'm going to take the pullback signal line, and you would have had a winning trade. If you're highly experienced, that wouldn't have been totally wrong, but the rule is we like to see a counter, in this case, buy channel that fails. Why? Because that failure of that buy channel gives so much more pressure to the downside on that second level move. That's why I invented the rule. I didn't just make these rules up randomly. These are extremely long time traded with precision, live trading, back testing, sim trading, more live trading. Everything's been tested. I was the guinea pig for all these rules. And my account benefited tremendously. And during periods where I was testing things, sometimes we had some little drawdowns because, you know, that's the only way, in my view, to make a trading system. I get a little disgusted at these guys that don't even trade the markets themselves, that I know personally don't. And then they develop systems. I think, oh, yeah, congratulations. You know, really, really honest. Anyway, steep downside move. We don't take third level trades. Obviously, this is a second level move. Even though we didn't get the counter buy thing, you could perceive this would have been a second level. It's not. It's a third level move. But you had the failure of the buy channel and the counter move. You might have taken it because that's just somehow at that moment that's what you were thinking. It was a third level move. If you took it, congratulations, you got a winner. Now what happens? Steep line, right? So what is the rule? We're repeating a lot of stuff here, aren't we? That's right, because there aren't very many rules. Wait for the dynamic trend band number 1 to cross dynamic trend band number 2 before getting in. You wouldn't have missed this because the pullback signal line and the new buy channel happened all at the same time. All those two alarms went off at the same time. It's just a fast spike move to the upside. These candles here, 93 to 90, you know, these are spike candles you wouldn't buy at the top of this fat channel. This would have been, this is what a fat channel looks like. This is clearly, you would not bought the top of the fat channel. You would have just waited and see what happens. Are the dynamic trend bands matching? Well, they are at this point. So in your live chart, you would have seen this matching here. Bought a trade at 93, approximately 93. They came down to 90 quarter. Would have knocked you out on this trade. The fact that this second level move, here's what happened, is the sell channel open to the downside, permissioning a buy on a second level channel. Well, second level channel happened, but again, spike candles whipsawed another fat channel. You would have just been waiting. And this is a third level channel moving up here, so we wouldn't have taken it. So you might have seen this with these red candles. You would not have bought this pullback here. You would have considered, oh, they're going to try to make a second level move. Otherwise, you got stopped on this one. No big deal. All of this was missed, not because of any reason other than the setups are not, the exact rules are not being set up. You know, here's again a counter, a failure of a buy channel, and then a counter here. Now here's why this one here, if you're really paying attention to this, this would have been a valid trade. Why? Dynamic trend bands are matching. Once that completed, you'd wait for the next one. This one here, same thing, a new buy channel. Even though it's a third, considered to be like a fourth level move, or if the dynamic trend bands are matching, that rule overrides everything, and you get a trade channel in that direction. You can buy a pullback signal line, and up they go. Same thing here. Steep upper level move. These first few sessions of October are giving us a real shot at what whipsaw looks like. With the steep band here, what is the rule? That's right. Wait for the crossover, dynamic trend band number 1, before you look for a counter sell channel. Now, what happened here was they crossed over, and there was a quick pullback right at that crossover with the color change at 11.75 that came down to 7. Had you missed that, you could have just waited and watched the whipsaw. You should have caught that, but if you miss it, no big deal. This is just permissioning a second level trade, right? Because it's a counter channel that failed. Now you have a new sell channel as of this candle. So what do you want to do? Well, dynamic trend bands are both matching. So you're going to trade a pullback right here to the signal line at 12. And he went to 15 and stopped out the trade. It's too bad because it made an extensive move to the downside. So in most, you would not have, this would have been a third level trade. We would have got stopped out here and we would have missed that one. There's nothing here that would have said not to take this pullback signal line to go short. It's just whipsaw markets. I mean, that's going to happen once in a while. So what about down here? Same thing. So the spread, look at the spread. When this is scooping down here, look at the widest point on the spread, 32.06 half, 98, much more than 5 points, so that's okay. Get excited because the next buy channel opens up here, pull back, the signal line occurs here, and you got a winning trade, which erases the one you just had back here, the loser. No big deal. Huge spike up. Now, what about this? Counter channel. Boy, this was a whipsaw day, man. Counter channel that fails permissions a second level trade right here. New channel opens, pull back the signal line at 7.75. Up they go to 10.75. Just barely grabbing 3 points. So if you didn't get 7.5, if you got 7.5, you would have just barely got it. So that happens once in a while. Then they spike them down, so you might have had to get out at break even or stopped out even. But this did produce a 3-point gain there. I don't think I recorded this one in our track record because, you know, look at this whipsaw. Man, it's crazy. This is a huge. Look at this candle. 7.75 down to 3. 4.5 point candle here. That's whipsaw. Just forget it. Same thing here. This is whipsaw here. Don't trade this. Just stand aside and relax. Just take a break. Now we're coming into the late. This is why, too, because it's the last half an hour and everybody's hyper and, you know, a lot of rigging going on. So we're going to skip that day. I'm trying to move quickly through these things, but if I don't sit and really explain this stuff to you, you're not going to understand it. And it'll just be easier to watch this over when I get it recorded for you rather than have to just email me with questions because I'm just going to have to show you charts. I can explain it better here than in an email, that's for sure. And it takes me less time. So the whipsaw opening here, this is all just whipsaw. Notice the bands are running really tight. And colors are changing. Channels are flipping. Just let it settle a little bit. Now you see the white line cross the dynamic trend band. You got a new buy channel here. And you see the dynamic trend band is crossed and the white channel has crossed and the dynamic trend bands are matching. Pull back the signal line is right here and up they go. Now this is going slowly in real time, so you have plenty of chance to see all this stuff. On the chart, it looks like it happened, and this did happen quickly. However, you have plenty of time when you're trading to see this. A counter sell channel against a steepish up dynamic trend band number 2, counter channel that fails because we didn't get permission up here on the dynamic trend band number 1. A new buy channel. There's a beautiful pullback 21 to the signal line, and up they go to 26 on a second level move. You see that? Level 1, counter sell channel that fails, and number 2, second level move. Now here's a second level move here, but what are we waiting for on this? Because it's so steep. That's right. We've got to wait for the dynamic trend band number 1 to cross over. So when this happens, there's a, you can see here also, spike candle, 23.50. Oh, this is only about 2 points. So you might have taken this sell here once this crossover occurred and got stopped out. Otherwise, here the dynamic trend bands match right on this candle. You got a new buy channel, the dynamic trend bands match, pull back the signal line 25, shoots up to 28 quarters, so you make your 3 points back from the 2.5 point loss there. Now the market has a new, because this one was successful, it resets the market again. So here we go. The dynamic trend band is below number 2. You got a new sell channel. So this is already, you're not looking at the wide spread with, that's only if the dynamic trend band number 1 is over number 2. You need that tight spread, but it's below now, so you're ready to go. Get that new sell channel, and down they go. Now keep in mind, I haven't mentioned this because the dynamic trend bands do so much of the work for us. You can also look down here when you're trading and everything's going slow. You can see these bias indicators. When these are all matching, and this one on the top, number 1, just means gray, means it's on that side of the 0 line. So that's fine. That's still a bearish sign. And all these are matching. The earliest warning will come from this down here, which is hyper scalp. That's that add-on indicator I was telling you. I've got it shrunk down to just a dot. Extremely sensitive and very excellent for catching trend moves. You can see the trend started here all the way down to here. The point is all these are matching. These gray or same color on the same side of the 0 line, when all these are matching, clearly that's confirming that side of the trade. Wide spread here. Again, get this wide spread concept down. It's not hard. At the peak of the scoop here, see that scoop? You're looking right about this area here, 24.5 down to 18.5, 5 point spread. That permissions you to buy the next buy channel, which is right here. Pull back to the signal line at 20 quarter. A little whipsaw here, but eventually they shot up extremely well to the upside. And this is all, you notice how these patterns, it's the same old stuff every day. Now that's a good thing. You want trading to be kind of boring. In other words, meaning the same old patterns. You'll get enough excitement when you put your money on the line. But how nice is it that with Boomerang you see these same old patterns repeat and you know exactly what to do? Now, right here you got a steep dynamic trend band. Yes, the spread is wide, but because that's steep, you're waiting for the dynamic trend band number 1 to cross over and try to see if some of this choppiness can dissipate. So you got it crossing over. You got a sell channel here. So you go short here, and yeah, the choppiness stops you out. But immediately, whenever you see this happen and you get stopped out here or you decide to stand aside, because, again, every strong move, upside or downside, is going to be met with whipsaw at the end of it. So you got stopped out here, or say you decided to just wait. Well, now what do you got here? Dynamic trend bands are matching color. There's a wide spread. You pull this trade at the pullback, the signal line, and a huge move to the upside. You see that? That's exciting. Because even if you got stopped out here, don't lose heart. Most 85% of the trades in October are winners. Just have confidence. The next one, follow the rules. Watch for this. There's your winner to erase your loser. And then this is getting a little late in the day. And, of course, there again, you got these spike candles, the downside. Don't trade here at the bottom of a fat channel. You got to wait. And, again, this is the final half an hour, often a very higher risk position to trade in. I don't record these trades. in the last half an hour on the track record. If I do, it added probably 10, 20 more winners, but I prefer to just skip it. Okay, we're moving very slow today. Sorry about that. Here's the 7th. Just doing my best here to get this information out to you guys. I'm going to go and turn the recorder off now because you've seen already all of the configurations that are going to occur in this first hour of this video. All the configurations have been there, which is namely the white line crossing the rim of the trade channel, the dynamic trend bands matching in color, taking a trade setup there, and a wide spread at the top or bottom of a move, permissioning the next pullback to the signal line within that configuration. We've seen a lot of choppiness here. We've seen where a market will reverse and where it still wants to keep going higher. So you watch for the matching dynamic trend bands, especially with the number 2 being steep. Trade that pullback signal line with confidence. They're going higher. You see that? Same thing here. When you get a steep configuration, yes, the white line cross here, the spread got thin. You got the matching dynamic trend band here. But in this case, you want to wait for the crossover to make sure and confirm that that trade's right. Now that the colors are matching, you got a fat channel. Trade at the red line or the pullback to the dynamic trend band number 1 or the space in between, just somewhere in this area. Get short. In most cases, it'll hold the stop and you get the trade going in your favor. You see that? Same old patterns repeating. And that's what I'm showing you today, and I'm going to go over the rest of those now. But I'll end the session now on this recording, and we're going to keep going.